Hello, very good morning to all and happy Friday. This is Kelvin here again. Welcome to today's Daily Dose of Market Insights. Happy Friday and very good morning. Today will be the 24th of January 2025. And before we jump straight into today's very exciting Daily Dose, due to the market volatility that we are witnessing right now, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick, we call it a recap on what has taken shape yesterday in terms of the intraday performance, and as well as any news flow and economic data release that has been released over yesterday's US session, and as well as in today's early session as well. So we know that today will be BOJ, and if I'm not wrong, BOJ should be releasing their monetary policy announcement outcome anytime from now. But nevertheless, I want to share with you there's some very important news pertaining to US trade tariffs policy. And what we could see this is just right hot the oven. So this news flow came in around 30 minutes ago before the start of our daily dose. So Trump actually expressed a reluctance to impose tariffs on China during a television interview, suggesting that a trade war between the world's largest economy could be avoided. So what we start to see over here is the way Trump's portray himself, this kind of element of surprise in terms of trade tariffs policy. So if you recall, about 1 day ago, he do mention that there's a possibility that US may slap China with additional 10% trade tariffs on the 1st of February. And right now, just about less than 48 hours from his earlier rather hawkish rhetoric, he's now changed his tone again to saying that he would rather not have imposed any tariffs on China. So what we could see over here is that on the intraday swing, the dollar actually weakened dramatically right now against the other currency that we got to respect, because some of the key levels has been taken out. So later I'll touch on the intraday technical outlook on the dollar major. All right, so this is the 5-day rolling performance against the US dollar as we're speaking right now. So what we could see over here is that the dollar declined significantly against the other major currency over here. So what we could see at this point in time, due to Trump's sway over this global financial markets, we tend to see this kind of very short-term erratic movement that we also got to respect, because if certain levels has been taken out, we will react accordingly. But the key story over here is that do expect this kind of more short-term two-way volatility due to Trump's nature of element of surprise, or I would say shock and awe kind of policy making decision process, and the way he like to convey his policy decision, especially a policy that he has total control, which is trade tariffs, because trade tariffs under particular certain Congress Act, Trump could actually enact trade tariffs policy under the cover or umbrella cover of national security without any Congress approval. All right. So then also with this rather dovish trade tariffs remarks towards China that was being conveyed by US President Trump about around 40 minutes to 30 minutes ago, that also created a positive feedback loop into the China stock market. So still recall that on the China stock market, the Hang Seng index, or the Hong Kong 33 as being the Hong Kong 33 as being represented in our platform, has managed to actually pierce up rather strongly today. So the Hang Seng Index up by close to 2% right now as we're speaking, 1.9%, and the higher beta Hang Seng Tech is up 2.84%, and the H shares, which is the HSCI, is up by 2%, and the China A50 is up by 0.6%. And if you look at the Nasdaq futures, is almost unchanged right now, followed by the S&P. So with that, let me share with you on the US stock market performance as well. So the US stock market performance yesterday also rather positive, with the SPX now, the S&P 500 now gaining a fresh all-time high yesterday at 6,118, a fresh all-time all-time closing high, gained by 0.5%. The Nasdaq gained by 0.22%, and the Trump trade preference over the industrial and the small cap stocks has starts to be in the forefront again, reacting positively and outperform the Nasdaq and S&P 500, outperform the S&P and the Nasdaq 100 yesterday, where the Dow Jones is up by 0.9%, the Russell up by 0.4%. So net overall, what you could see is the intraday movement is rather bullish, where the SPX managed to close near the high of yesterday, which is a fresh all-time high, followed by the Nasdaq 100 as well, closed at its intraday high yesterday, and the Dow Jones Industrial Average also closed at its intraday high. So what we could see over here is it seems to us that a weaker dollar right now seems to be enacting a positive feedback loop in the global stock market right now. Okay, so we got to respect this intermarket dynamics, intermarket risk on dynamics with a weaker dollar. So with that, other data to take note over here will be Japan. So if you look at Japan data right that is out this morning, we do see a slew of data that is supporting a rather continuation of normalization of interest rate policy, gradually slowly hiking upwards by Bank of Japan. So the core inflation for Japan came in at 3%. That's within market expectation of 3%, 2.7, and the inflation ex food energy, this is where the Bank of Japan is watching very closely, managed to maintain at 2.4%. So if you look at the trend of the inflation rate, ex food and energy is able to stabilize above that 2% long-term target that Bank of Japan desired before embarking a much more, we call it continuation of their normalization policy by gradually hiking the short-term interest rate northwards. Okay, let me share with you this trend. Okay, so notice that it actually, since the low of 1.9% in July 2004, it starts to slowly trick up upwards over here. So if you look at the 5-year trend, okay, there it seems to be a V-shaped recovery in terms of the Japan core inflation rate. So that should actually give more confidence for the Bank of Japan to continue its normalization policy by taking up the short-term interest rate gradually northwards. And also other important data or tier 1 data from Japan is the leading one of the leading economic indicators, which is the PMI data. As we know that PMI data is survey based, so it tends to be more forward looking. So manufacturing PMI flash, this one was not so rosy, 48.8. Markets expecting 49.7, so it continues to hover below the 50 level mark. But what's interesting is that the services PMI managed to be very, very rosy and soared higher or expand further to 52.7. So if you look at the services industry in Japan, continues to actually diverge from the manufacturing we call it industry. So if you look at the situation here, okay, so if you look at the since October low, okay, it slowly starts to pierce upwards over here. So it rose to 52.7 in January from 50.9 in December. So this is the third consecutive month of expansion growth in the services sector in Japan, and as well as the strongest pace since September last year. So if you look at the 3-year trend of the services PI, it also starts to shape up higher as well. Okay, shall turn up higher. So that also give a bit of what you call it confidence for the Bank of Japan that the services industry is humming along, managed to offset the still contractionary mode in the manufacturing industry or the manufacturing sector, as we see the manufacturing PMI still continues to hover below the 50 level mark. So in terms of PMI data, anything that is below 50 level is considered contraction. All right, so let's look at it over here. Okay, so you look at the 3-year trend. Okay, it's still contracting downwards, a series of lower high since May 2024. But however, this lackluster manufacturing performance PMI has been more or less offset by the rosy performance of the services sector. Right. So now with that, let us see whether BOJ has announced their policy making, where market is actually expecting a 25 basis point hike, all right, to bring it to 0.5%. So let me refresh it. Okay, I think it's not out yet. Okay, the data is not out yet. So let's continue our daily dose of market insights. Okay, so now with that, this is the key data that I will share with you guys, and also that despite the weaker dollar that we see over here, we also start to see the gold rising as well. So gold yesterday, we have a short-term bearish bias for that corrective pullback. Still recall that we're only looking for a corrective pullback within a potential ongoing medium-term uptrend that has been show in gold XAU/USD because of the burst of that, the bullish breakout of that 2-month range resistance at the 2007.26 2007.16 level. So if you look at gold right now, also reacting rather positively due to a weaker dollar. So gold is up by 0.8% now. All right, but West Texas crude oil is rather lackluster. Later I'll share with you all due to conflicting factors right now. Yes, we may see a weaker dollar, but however, why West Texas crude oil is not showing so much of a strong performance is also because of Trump policy, where he signed an executive order that's saying that he actually have an aim to make US as one of the major leading oil producer. So that actually causes a potential increase in global oil supply coming up from US, that actually put a cap on any positive catalyst that could actually drive West Texas crude oil higher from a weaker dollar. So we'll touch more about that when we cover the short-term intraday technical outlook on the West Texas crude oil thereafter. So with that, now let us now touch on the intraday technical outlook on the FX market. But before that, let me expand my screen so that you guys could have a better view on the charts. So let us, okay, whoops, what's going on? Okay, let me, okay, I think this should be okay. Yes, my apologies just now. All right, so now let us now quickly start the intraday technical outlook, starting with the FX market. So let me take you through the euro dollar first. All right, so for the euro dollar, what we could see over here is that let's go to the daily time frame chart because of, you know, the intraday basis. There's a lot of noise due to this kind of volatile nature of Trump in terms of his decision-making process from this trade tariffs policy. So what we could see over here is that the daily RSI has started to stage a bullish breakout. Okay, from here, all right, a bullish breakout. Okay, and prior to the bullish breakout, there's this bullish divergence as well. Okay, and right now the price action is also attempting to break above the 50-day moving average. All right, also very close to the graphical intermediate resistance at 1.046 level. So that was our short-term pivotal resistance yesterday. All right, so but given this bullish divergence and this bullish breakout, and where it is now is able to go above the 50 level mark, that means i.e. on the daily time frame, the daily RSI is now building up a kind of a medium-term upside momentum. That means i.e. This momentum that could last potentially to a multi-day to multi-week scenario. And also based on the Elliott wave perspective, what we could see over here is that there could be a potential completion of a 5-wave down. 1, 2, 3, 4, 5. This on the daily time frame chart. So let me put it in writing. Okay, so this is the wave 1 over here with a wave 2, a wave 3, a wave 4, and a 5th wave. Okay, this is the Elliott wave perspective. So every 5 wave down, that means it's very likely to complete off a particular cycle in the trend cycle. So this is a downward trend cycle. So this medium-term downward trend cycle or medium-term bearish trend cycle based on the 5-wave down Elliott wave perspective very likely has already been completed. So this is the 1.020 inflection point or the end point of this medium-term bearish downward cycle trend based on the Elliott wave, and also being supported by the bullish divergence that is being seen on the daily RSI, coupled thereafter with a bullish breakout and the RSI going to go up above the 50 level mark, hasn't hit the overbought level yet, indicating that this downward movement of a elliott wave 5-wave down, and that means from the 25th of September high all the way down to the low of 13th of January this year, this potential medium-term downtrend has already ended. And what we could see over here is that, okay, let me share with you to do the Fibo 5th wave target. High, okay, you project it to the 3, project to 4, okay, roughly 0.382, and if you have the one time over here, so one time extension from the wave 4, and this 1.02 graphically is also at this level here, okay, this congestion level. So what we could see over here is that potentially there could be a chance right now, or a high odds, that we will start to see a multi-day to multi-week corrective rebound pace to retrace this 5-wave down movement, corrective rebound before another medium-term downtrend take shape again. Right, so we're talking about the next the next day, or the next multi-week perspective, at least for we call it a 1 week perspective, given that this is a daily chart. So for next week, potentially we may start to see this start of this. In fact, potentially we may see more a potential scenario that this corrective rebound could play out based on the current technical configuration that I highlight to you on the daily chart of the euro dollar. So after a 5-wave down, 1 2 3 4 5, potentially we may retrace 50% to 61.8% Fibo retracement. If I do the taking out from the high of 25th of September all the way down to the 5th, all the way down to the low of 13th of January. So we see the 50% Fibo retracement at this 1.0690. Also graphically is at this 1.066 level. The 200-day moving average is coming in at 1.0770, so maximum then this is slightly below the 61.8%. So this is the two key resistance zone that we could watch from a medium-term perspective. All right, so on the daily basis or on the intraday basis, we'll take things one step at a time. That means there could be shorter term intraday resistance level hovering at around the 1.055 level, 1.058 level. Okay, if you go on the hourly time frame chart. Okay, so with that, I'm not so confident that we could still maintain the intraday bearish bias, despite that it hasn't broken above the short-term pivotal resistance of 1.0460, given the fact that the daily RSI has started to turn bullish. So for today, we will actually flip to a intraday bullish bias. First support level will be yesterday's minor swing low area at 1.039, but I don't put it so tight. I'll put it slightly lower for the short-term pivotal support for today at 1.0340. So what is 1.0340 is a confluence with the 20-day moving average, I think, as a support, as well as the lower boundary of this potentially unfolding minor ascending channel from the low of 13th of January. So as long as today's any sign of whipsaw or pullback, drift downwards, didn't surpass below 1.0340, we will flip 1.0340 short-term pivotal support level. We will flip to a intraday bullish bias on the euro dollar for this potential mean reversion rebound to take hold above 1.0460, exposes 1.052 next. We saw the upper limit of this minor ascending channel, and as well as the congestion area of 12th of December and 17th of December. All right, so that's for the euro dollar. Only an hourly close and a breakdown below 1.0340 will invalidate today's intraday bullish bias to totally reverse that potential mean reversion rebound scenario to allow the impulsive down move sequence to take to re-emerge again, exposing the next near-term support level at 1.0260 / 1.0240 and potentially 1.19 level as well. So that's for the euro dollar, using 1.0340 short-term pivotal support level, flip to a intraday bullish bias for the potential mean reversion rebound to take shape due to the positive technical elements that is being depicted on the longer term chart, which is the daily time frame chart on the euro dollar. Now, moving on, next will be the sterling dollar. So same as well, the sterling dollar also continues to hover below the 1.2405 short-term pivotal resistance level, but we are not so confident as well due to the elements that is being seen on the euro dollar. So with that, I'll be flipping to a intraday bullish bias on the sterling dollar as well, potentially seeing a kind of a mean reversion rebound now taking hold on the sterling dollar using 1.2230, very clear congestion level that was being seen yesterday. 1.2230 will be my short-term pivotal support level to maintain that in today's intraday bullish bias for that potential mean reversion rebound scenario to play out. Above 1.2405 exposes 1.2480 next for today, and potentially if this level is also being breached on the upside, we may see 1.2570 next intermediate resistance coming in, which is the minor congestion, a minor swing high of 31st of December and 7th of January. Only an hourly close below 1.2230 will invalidate today's intraday bullish bias to see the continuation of that or the re-emergence of the impulsive downward sequence, exposing the next support level at 1.2160 and potentially 1.2080. So i.e. in a nutshell, we will be using 1.2230 short-term pivotal support level on the sterling dollar, and we flip it to a intraday bullish bias, uh, bias, and for that potential mean reversion rebound scenario to play out on the sterling dollar as well. Now, turning our attention now will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So Aussie dollar, yesterday we were neutral between the 0.29, 0.6290 and 0.62 we call it 16. So in today's Asia session, it broke above the upper neutrality zone over here. Okay, there's a bullish breakout today. Okay, broke out this level. So what we could see over here is okay, this level here is 0.295. It broke out. So with that, we will flip to a intraday bullish bias for this potential ongoing mean reversion rebound scenario to play out. So first support level to watch will be the pullback 62.95, but I will not put it so tight. I will use yesterday's minor swing low area that has been tested one time, two time, three time at 62.55. So as long as this minor pullback didn't reintegrate back below 62.55, we will flip to a intraday bullish bias on the Aussie dollar for this potential mean reversion rebound scenario to unfold. Next intermediate resistance will be 63.60, followed by the medium term pivotal resistance at 64 figure. Why 64 figure is important? If you go to the daily time frame chart, this is the dotted line here. So this 64 figure level hovers very close to this dotted line of this former major trend line support that was previously in place since 13th of October 2022 low that has been staged that major so-called range resistance bearish breakdown over here. Okay, let me delete this, delete this, delete this. All right, it state that bearish breakdown on 11th of December. All right, so now this will be a key pullback resistance level to watch, which is a 64 figure level. So with that mean reversion rebound, we will look at these two resistance level, and we can't go beyond 64 figure level because that is indeed a clear key significant graphical resistance level that we got to respect first, unless it has been clearly taken out. That means with a daily close above it, then we could validate potential further push up from 64. Until now, we will not know how the price will move at this juncture. Will it break above 64 level? I cannot tell for sure, but we know that the 64 level is previously a significant we call it support, now turns into a potential significant resistance. All right, so only an hourly close and a push down below 62.55 will invalidate today's intraday bullish bias to reinstate the best to expose the next near term support level at 62.16 followed by 61.65. Now, lastly will be the dollar yen. So the dollar yen continues to churn. All right. So yesterday we are looking for it to push up above here, but it didn't hit the resistance and it starts to tumble down as well. So with that, potentially we may revisit here again, because let me see whether is it out. Okay, 1 second. The economic calendar. Yeah, it's out. So it came in within market expecting 0.5%. And let's take a look at what are the statement that it have already mentioned. So I tend to go to this one called forexlive.com. They're able to give up a very fast statement. Okay, let's see. Okay, so I think nothing is out yet. So just a quick summary. Okay, so BOJ hype mainly of two factors. Okay, so it's signs of ongoing wage rises, no market turbulence in the wake of Trump inauguration. All right, over here, and very likely later there will be potentially a BOJ Governor Yuda during his press conference at 6:30 GMT time. So that is 2:30 p.m. Singapore time that he may expect he will do a press conference. So market participants will hear his guidance whether he will signal further rate hikes to come. All right, so let's go back to the chart over here. Okay, on the dollar yen. Okay, so with the dollar yen, we will be using this 20-day moving average as my short-term pivotal resistance level, because potentially there could be still a spike up during his speech over here at this at that point in time. So I do not want to put it so tight of yesterday's high at 156.66. So still using 157.15, 157.50 short-term pivotal resistance level on the dollar yen. We will flip to a intraday bearish bias on the dollar yen for today. First support level to watch will be these two key support level, 155.30 followed by the 50-day moving average at 154.80 slash 154.50. Unless we could see a breakdown below 154.80 slash 50, then potentially the short-term impulsive downward sequence may continue with a bearish breakdown of the 50-day moving average, exposing the next near-term support level at 153.20 next, which is the minor swing low of 18th of December. So if you were to monitor closely this potential price behavior of the dollar yen, especially when it comes very close to the 50-day moving average that has been acting as a support level since 21st of January, where it was tested and shaped that minor corrective bounce. Only an hourly push-up with a above 157.50 with hourly close above 157.50 will invalidate today's intraday bearish bias to see a squeeze up towards the medium-term resistance zone at 158.35 slash 158.30. So net in a nutshell, we'll be using 157.15 slash 50 as my short-term pivotal resistance level and flip to an intraday bearish bias. The potential key support level to watch for today on the intraday basis, and also my downside trigger level potentially to expose more potential weakness on the dollar yen will be 158.80 slash 154.80, pardon me, slash 154.50. All right, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar FX pair. So now with that, let us focus our attention to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 continues to push upward as expected, still holding above the 20-day moving average, and as well as the 50-day moving average at this juncture. And also where it rebound right exactly above 19,580 mark. All right, so given that right now it's trying to break out above the 20,260 level at this juncture in time, so I do not want to tighten my key short-term pivotal support levels to be so tight unless we could have an hourly close in the next hour above 20,260. Then I will tighten my key short-term pivotal support to the 19,790 level. So this so I'll be still using 19,580 as a more cautious approach as my short-term pivotal support level, maintain the intraday bullish bias on the Hong Kong 33. Next resistance level to watch will be 20,520, followed by 20,000. Okay, let me put it push over here. Okay, 20,250, followed by 20,840, which is so the upper limit of this minor ascending channel, and also this congestion area over here of 9th of December. Only a push down with an hourly close below 19,580 will invalidate today's intraday bullish bias to see the choppy downward drift movement again on the Hong Kong 33, exposing the next near-term support level at 19,350, followed by 19,135. So i.e. still maintaining that intraday bullish bias on the Hong Kong 33. Now, Japan 225 or the Nikkei 225 next. So the Nikkei 225 pierced up as expected and hit the upper limit or the upper boundary of this complex sideways range configuration that we have mentioned yesterday, and we also have a flip to a intraday bullish bias in the last 2 days. So still recall the Nikkei 225 or the Japan 225 Bitcoin platform since the late September last year, which is 27th of September, it has been trapped in this complex sideways range configuration. And what you see today over here, it managed to do a push up over here, and this push up over here, the hourly RSI already hit the overbought level as well. So given that it hasn't have a clear bullish breakout in the last we call it on 7th of Jan and 30th of January, and the price action now is shaping and potentially hourly doji candlestick formation. It hasn't ended yet because it's still got 30 more minutes to go. And given that the hourly RSI is within overbought region, so we will now be more conservative since it's Friday as well. We will flip to a neutrality stance for today. All right, so neutral between the upper limit over here, 40,420. Okay, so this will be my neutrality stance for today, and the lower limit will be okay, this level here slightly high. Yesterday's minor swing low during the start of the US session before that rebound take shape. This will be 39,740. 740. Okay, so we will adopt a neutrality stance for today. So neutral between this 40,420 and 39,740 for today. Unless we have an hourly close above 40,420, then we got to respect this very sharp impulsive upmove sequence on an intraday basis, exposing the next near-term resistance zone of 4865 slash 41,050. So this is the 2-time Fibo extension, and 41,050 is graphically the previous congestion area over here, the former minor swing low of 12th of July and 16th of July last year. So i.e. Given that it's now at the top of the complex sideways range configuration, and with the potential ongoing doji hourly candlestick that may form in the next 30 minutes, we will flip to a intraday neutrality stance for now, neutral between 40,420 and 39,740 for the Japan 225. All right, so onwards next will be the European stock index, which is the German 30 or German 30. So the German 30 continues to its very strong upside momentum, keep on printing fresh all-time high for the entire week of this week. So it hit our resistance as expected, 21,530, and also at the top of this channel over here. And given that there is no clear signs of a bearish divergence, yes, hourly RSI is being overbought. So potentially what we could see at the start of today's European session, it may do a slight dip down first. So a slight dip over here, potentially first support level to watch will be yesterday's minor swing high during the start of the US session at before the start of the US session at 8 p.m. Singapore time, which is at 21,360 level. I don't put it so tight at 21,360. I'll put it slightly lower, which confluence with Wednesday US session intraday low and the lower limit of this ongoing minor ascending channel from the low of 13th of Jan at 21,240. So as long as this minor pullback didn't surpass below this slightly higher short-term pivotal support level that we have for today at 21,240, we will still maintain the intraday bullish bias on the German 30. Next resistance level to watch will be at 21,680 slash 21,770, which is defined by a cluster of Fibo extension level linking to this similar cluster zone as well. Only an hourly close and a push down below 21,240 will invalidate today's intraday bullish bias to kickstart a minor mean reversion decline scenario or a minor mean reversion corrective decline scenario, we're going to call it, exposing the next near-term support level at 21,070 followed by 20,940 next. So that's for the German 30. Onwards will be the Wall Street 30, the US Wall Street 30. So the US Wall Street 30 also pierced up as expected, coming close to our first resistance level at 44,740 that we highlighted. So with that, we will actually tighten our key short-term pivotal support level for the US Wall Street 30 for today, i.e. the Dow Jones Industrial Average at 44,130, which is yesterday's European session low, and as well as the lower limit of this ongoing unfolding minor ascending channel from the low of 13th of Jan. So with that, we will maintain that intraday bullish bias. Resistance level still remains unchanged above 44,740, potentially exposes 45,090/100, which is the 1.236 FIBO extension, and the upper limit of this ongoing minor ascending channel, and as well as the current all-time high area over here from early December last year. Only an hourly close below this tightened short-term pivotal resistance level, short-term pivotal support level at 44,130, pardon me, will invalidate today's intraday bullish bias to kickstart a minor mean reversion decline scenario, potentially revisiting the 50-day moving average and also acting the graphical, former graphical resistance level of 43,730/43,600. Only a breakdown below 43,600 today may see the extension of the minor mean reversion decline scenario, revisiting 43,095 next, which is the minor swing low of 16th of Jan and the 20-day moving average. And if you do the FIBO retracement of this ongoing uptrend, you also correspond very closely to the 50% retracement as well. So i.e. in a nutshell, using a tightened key short-term pivotal support level for today on the US Wall Street 30 at 44,130 to maintain the intraday bullish bias. Now with that, up next will be the Nasdaq 100. So the Nasdaq 100 continues to pierce up over here, hit the first resistance level before shaping a sideways range configuration. So since it can't surpass above the first resistance level, I don't want to tighten the first support level to be so tight. So this first support level that we highlighted yesterday, which is at 21,730, managed to form that intraday V-shaped recovery. But since it can't break above 21,960, I don't want to tie it so pretty so tightly to at 21,730. So still using 21,610 as my short-term pivotal support level. Maintain that intraday bullish bias for the Nasdaq 100. Next resistance level to watch 22,130/160, followed by the 1.382 FIBO extension as well, and close to the upper limit of this minor ascending channel. That will be 22,230/22,250. All right, so the current all-time high area will be at 22,130/22,160. Only a push down and an hourly close below 21,610 will invalidate today's intraday bullish bias on the Nasdaq 100 to kickstart a minor corrective decline scenario, exposing 21,425 and potentially even 21,240, which is the minor swing high low of 21st of Jan, and also confluencing with the 50-day moving average. All right, so i.e. in a nutshell, since that it can't break above 21,960, our first resistance that we highlighted yesterday, we'll be still using the same short-term pivotal support level at 21,610 as my short-term pivotal support level for now to maintain the intraday bullish bias, unless as during the European session it managed to have an hourly close above 21,960, then potentially we could tighten the short-term pivotal support level to 21,730. All right, so that sum up the intraday technical outlook on the broad-based or the major stock indices. So right now, let us now focus our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, yesterday we are looking for a minor corrective pullback. So the minor corrective pullback printed a low of 2,735, slightly above our desired support zone of 2,728/2,719. So this level is important. Why? Because this is the range top, the former range top of this 2 month plus of sideways range configuration, or we call it a kind of a not so 100% perfectly shaped minor ascending channel. So it broke out above the minor ascending channel on the 22nd, on the 21st of early US session on the 22nd of January. Yesterday it did a pullback. The pullback stopped at the start of the US session before rebounding and printed a series of higher high and start to hit the first resistance level at 2772. So with that, I'll be using for sure this level. Okay, let me see. This level will be my short-term pivotal support level. First support level to watch in any case of a minor pullback, given now there is a bit of hesitance at the 2772 level, and also the hourly RSI is already at the overbought level as well. So during the open session, we may see a bit of pullback given the formation of this hesitance of this candlestick over here. Okay, so support level to watch in the pullback will be a zone over here at 2757, 2751. Right, it's a zone over here. Okay, but I do not want to use this zone as my short-term pivotal support level just in case of any whipsaw. This level will be very key because this is the former 2-week plus or 2-month plus of range resistance now turns to a pullback support. 2728/2719, that will be my pivotal support for today for Gold XAU/USD. So we will flip to a intraday bullish bias for Gold. The next resistance level to watch will be at the current all-time high area 2790, followed by a Fibo extension level at 2812, 2820. Only a push down and an hourly close below 2719 will invalidate today's intraday bullish bias to see a choppy downward drift, and also potentially if on a daily basis it can't recover back above 2719 level, then that bullish breakout on the 21st of Jan will be considered as an invalid bullish breakout and may start to see more downward pressure. But in first step, the next two near-term support level to watch if 2719 is being taken out on the downside will be 2690, followed by 2676, which is the 20-day moving average, I think, as a support level as well. So i.e. in a nutshell for today, we'll flip back to a intraday bullish bias for Gold XAU/USD using 2728/2719 as my short-term pivotal support level. All right, so lastly will be the West Texas crude oil. So the West Texas crude oil yesterday broke down below our short-term neutrality zone. So yesterday we were neutral between 77.42 and 76.15. So it broken down below this level yesterday. So we got to validate a movement over here, validate a potential downward drift movement on the intraday basis. So my intraday short-term pivotal resistance will be using yesterday's start of US session high or yesterday's intraday US session high, and also confluence with this descending trend line that has been capping further upside on the West Texas crude oil on a very short-term basis since the intraday high of 16th of Jan. So now this will be at 77.07. Okay, let me put it in writing. So this is 77.07. So this will be my short-term pivotal resistance level. Okay, short-term pivotal resistance level. This one, let me remove it. The next support level to watch out for today will be at 74.40. A breakdown below 74.40 exposes the 73 figure level, which is the minor swing low area of 3rd of Jan and 9th of Jan, and as well as confluencing with this medium term ascending trend line from the low of 6th of December last year. And also this price action that has taken shape yesterday by the breaking down of that 76.15 level is also considered pretty bearish from a medium-term perspective. Why? Because it has really reintegrated back below the previously taken out descending channel or descending triangle resistance that I drew from the high of 28th of September. So previously, for March all the way up, from March onwards, March 2023, the West Texas crude oil on the daily chart, it has been trading in this kind of major descending triangle range resistance. All right, every time it tested on the 9th of April last year, tested on 1st of June, didn't test on the 7th of October, almost test, but came all the way down, and it did a bullish breakout on 13th of Jan. Then after this bullish breakout cannot maintain the momentum after can't break above 80.30, and yesterday it shaped a daily close below this dotted line. So what it means that the bullish breakout on 13th of Jan is considered as a failure bullish breakout, and that could potentially inflict further price weakness on the West Texas crude oil to hover back to the lower limit again of this major descending triangle range configuration. All right, so this has a yesterday movement has a significant implication, indicating that that previous bullish breakout on the daily chart is a failure bullish breakout. All right, on the 13th of January this year. So now back to the hourly chart on the West Texas crude oil again. So to recap, I'll be using 77.07 as my short-term pivotal resistance level, flip to a intraday bearish bias on the West Texas crude oil from yesterday neutrality stance. Next near-term support level to watch on the intraday basis with 74.40. A breakdown below 74.40 exposes 73 figure next. However, if price action starts to push back up again and do another choppy movement and an hourly close above 77.07, we will break out above it, that will invalidate today's intraday bearish bias to see the next resistance coming in at this 78.75. Then above 78.75 potentially sees the 80.30 slash 90 resistance level, which is the minor swing high area of 16th of January. All right, so with that, that also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for? So bear in mind, the next intermediate event to look out for will be this event over here. Will be Bank of Japan Governor Yuda media briefing or press conference at 0630 GMT time. So you convert GMT time to Singapore time, that will be 2:30 p.m. Singapore time. A key event to watch to actually potentially could see some kind of significant movement on the dollar yen and the yen crosses. Then other economic data to take note of for today, and today will be the release of globally flash PMI data, both on the manufacturing and the services that I already covered on Japan. So going on to the European zone or East Eurozone, you will see 4:15 p.m. the release of flash manufacturing PMI and services PMI for France. At 4:30 p.m. that will be Germany, and at 5 p.m. will be the combined Eurozone one manufacturing PMI and services PMI data. And what we have over here will be at 5:30 p.m. Singapore time. That will be the UK manufacturing PMI and services PMI flash data. And later on, we have another speech by ECB Lagarde as well. Again, speaking at 6 p.m. I believe that it still be in Davos as well. 6 p.m. Singapore time, ECB President Lagarde speech in Davos. Okay. Then thereafter, we at 10:45 p.m. Singapore time, we have the S&P Global US manufacturing and services flash PMI at 10:45 p.m. Singapore time. Then thereafter will be pretty much, this will be the University of Michigan final consumer sentiment data. So the flash one was released 2 weeks ago. So I think that shouldn't be a big change, because previously it's a 74 mark. Okay, so it should be more or less the same at 11 p.m. But what's interesting over here is we know that the earnings season in US continues to take shape. So for today, let me highlight the earnings calendar. So today there will be one particular key component stock in the Dow Jones Industrial Average. That's our US Wall Street 30, will be a financial. So that is American Express, Amex. Okay, Amex will report its earnings. This will be the key data to key key US earnings company to watch out for, because American Express is one of the is a financial, and financial do have a significant influence in the Dow Jones Industrial Average. So it will be reporting before the start of the US session. That means before 10:30 p.m. Singapore time today. Market is expecting a rosy EPS growth as well for Q4. EPS consensus will be at 3.02% above previous quarter at 2.62 EPS. Okay, now it's 3.02 EPS, earnings per share, above Q3 previously announced 2.62 EPS. All right. So with that, that sum up today's intraday, sum up today's daily dose of market insights. I'm Kelvin here. I wish you all a great and restful weekend, and we shall speak again on next Monday. Thank you.